What's going on, everybody? Today, we're going to be talking about using your VA home loan and purchasing in a 55 plus community. Thank you to subscribers out there that have reached out and have asked this question. Can I purchase in a 55 plus community and utilize that amazing VA home loan? So, the short answer to that is yes, but let's go through where you may run into hiccups. First, let me show you guys the in the VA handbook where it has this information, because there's actually a couple parts to being able to purchase in a deed restricted property. One, a lender does have to allow for that. And that is something that we have found from people calling in and as well as doing some research, is that some lenders don't do deed restricted properties, or they may, because they may require special approval, or they think that the VA doesn't allow for them. So let me show you guys right here, and I'll also link it down below, where you guys see the VA may guarantee a loan on which a title restriction limits the sale, lease, or occupancy of a dwelling to persons based on age. Okay, that's the important part here, including a prohibition against the permanent occupancy of a dwelling by children, provided such restrictions complies with applicable federal laws. So those are that's one, that's obviously a huge piece to it, because you then can use your VA home loan and purchase in these communities. Now, depending on how the community is set up, and meaning that from what we've seen, a lot of times they're either going to be a planned unit development, like in a subdivision. They may have single family homes, or they may have town home construction style properties. But the challenge with those is we've also seen a lot of them be condominiums as well. And just remember, you can have single family condos with that. Now, when it comes to the condo part, that does require VA condo approval, even if it's in a 55 plus community. And that is something that we do all the time and have a ton of videos around that. Just remember, you can get a waiver if the condo is denied. So that's an important part, because there's some people that really want to be in certain communities, and they may have, let's say, leasing restrictions or something that the VA deems that it would hurt the veteran. But you then have to sign a letter saying, like, I understand all these issues that are happening with the property and the restrictions that exist, and I still want to purchase in this community. Well, then the VA can issue a one-time waiver. We've seen, from my experience, we've seen all those waivers come through. Now, when it comes to using your VA home loan, there's a couple things that you want to think about. One, you can have multiple VA home loans. So if you currently own a property and you then want to move to a 55 plus community, and let's say, for example, you have, I don't know, kids that live in the area, and you're thinking about, hey, maybe they can have the house. That actually is an option. You could move out, rent that property, and as long as you have enough entitlement, you don't have to do a down payment on the next one. That's a huge advantage. You can also have your kids assume your VA home loan. So if you have a great rate on the loan, they can actually assume it and lock in a portion of your benefits, right, to that property. And now they own that mortgage and that home. So in the event something were to happen to you, it doesn't have to then go through a big process, right? And so now fast forward, now you can then purchase this other property, but you can still keep your current one. You don't have to have it assumed. Again, it depends on what the county limit for the area is for your home loan. And I have a whole separate video on having multiple VA loans. That still does apply to you to be able to execute on that. The income components to it are going to be also like a standard VA home loan purchasing in this. You still have to be able, be able to afford the property. So they're still going to look at the type of income that you're receiving. If you are on fixed income, like VA disability, that income could be used right away, even if you just received it yesterday. If you have Social Security, SSDI, Social Security disability income, that can also be used to qualify. Whatever rating you have, right, from 10% to the 100% permanent in total, all that income could be used. One thing that you do have to find out about is going to be the real estate taxes. So if you do qualify in an area where you don't have to pay real estate taxes based on your VA disability compensation, your percentage rating and status of that, then you will have to find out if that community honors that or how it works in that area. That part I am not sure on, but that's something you need to do some research into. If you sell your current property and you go into one of these 55 plus communities, you can take that money that you make from the sale of that property and use it as a down payment on the VA loan. A lot of people ask, why do I ask if I want to do a down payment on a VA loan? Because it's all about what your payment is going to be. And a lot of times you are on fixed income from the 55 plus communities. Just my observation. I'm doing this for a hot minute. So make sure you do the research. Make sure you see what amenities come with that. If you have insurance or you want to be close to a VA facility, that's another big factor for a lot of veterans out there looking to purchase a property and be in one of these communities, or at least be close to one of these communities. But those are all things that you want to take into consideration. If you have savings, because you're still going to have to pay closing costs, right? If you have a VA disability rating of 10% or more, you don't pay property taxes. I take that back. You still pay property taxes for the most part if you have a 10% rating, but you don't pay the VA funding fee, which is pretty significant, right? It ranges from 2.15 the first time you use it. And then if you use it again, that's with no down payment, by the way. If you use it again and don't do a down payment, then it's 3.3%. That's pretty significant. And if you do 5% down, it drops to 1.5% VA funding fee. That's the only fee that gets rolled into a mortgage on a purchase transaction. And if you had 10% or more down payment, it drops down to 1.25% as the VA funding fee. Those are all things to consider, again, when you're going through that process. And you also want to be able to see if you can change title after you purchase a property in one of these deed restriction properties, because, again, that's going to affect what you can do, and also passing that property on to your next of kin. And one thing that I did look up when I was taking a look at this, I'm going to pull this up in a second. I just need to find it. So let me share my screen on things that the VA is not looking. Oh, it's not pulling it up on the side. Let me zoom out a little bit so you guys can see what I'm talking about. So this is going to be examples of restrictions that do not require VA approval. Okay, so if the property involves reasonable encroachments, easements, right? So a lot of times, let's say you're buying a single family home and you have to cross your neighbor's property in order to get to it. Well, in the past, the VA, it was a big process, and a lot of times people didn't want to deal with VA loans because they would need all the agreements that were in place. Now, the VA was asking for this. But the states all have some type of rules around what these easements look like. So that's why they've kind of stepped back from that. This also includes reservations for water, timber, subsurface rights. Make sure you read those title policies, because I've seen some where they'll take the title, somebody owns all the mineral rights, and you're just buying like the land and the house. It's kind of weird. Make sure you do your research into that. So sometimes these will also require to be submitted to the VA for approval as well. So you do have to factor that in the time frame that you're trying to do this in. I've seen most of these still close within a 30-day period, especially even with VA condo approval in that mix. But just note, depending on what regional loan center that you're going to, that process may take from 30 to 60 days because they take much longer to do the condo approvals. Now, that's specific to condos. If it's a planned unit development, like in a subdivision, then typically, you don't need a VA condo approval. So that part's pretty straightforward. Some communities will have a mix of condos and planned unit development, depending on what association you're buying in. Again, those are things to consider throughout that process. And just make sure if you have the VA disability exemption for property taxes, you meet the criteria for the area, that you do the research ahead of time. Easiest thing to do is to reach out to the county assessor's office, as well as talking with the sales rep at that location. So hope you guys had some good takeaways from the video. Make sure you like and subscribe and share it with other veterans so we can get more information out there to make good financial decisions. And I'll catch you guys on the next video.